Hello once again, I'm Kevin Turner from Real Estate Talk. Good to be with you once again. Well, with so much talk about different strategies and which one is the most successful, many investors are looking for the best strategy that suits them. Natural thing to do. My guest on this interview has been using the same strategy for quite a number of years and in doing so very, very successfully. Jason Mak has built a portfolio of 22 properties worth almost $8 million and he joins me. G'day, Jason, how are you?
Hi, thanks, Kevin.
Good. Jason, in the article in Australian Property Investor magazine, the April issue, we can see that your strategy is about buying low-cost units in quite high volumes, 22 properties. Could you tell me how you decided on that strategy?
Well, basically, it's all about spreading the risk, Kevin. As any, attuned investor will tell you, you must not put all your eggs into the one basket. And basically, I've done a bit of research before I've actually kicked off my strategy. Went to every single one of the real estate agency and basically asked them a couple of questions. You know, if I can afford a four-bedroom townhouse versus two-bedroom units, which is more difficult to rent out. And almost every single one of those agents will tell me it's more difficult to rent out a four-bedroom townhouse than it is with two-bedroom units. Okay, so it was that simple fact that I know that is it easier to rent out the smaller apartments, the smaller units. Therefore, I've decided to actually have more of the normal two-bedroom properties than it is with the more expensive houses or with the more expensive three or four-bedroom townhouses.
Absolutely fascinating. Well, the article is very good. It goes into a lot of detail about the properties, but in reading through that, I just wonder if you can explain to us how you managed to finance multiple properties within such short timeframes.
So it is always the hardest to begin, as with any of these adventures. I mean, but nevertheless, the first step of a thousand mile begins with the first step. So essentially, it is very important to have a family that supports you. Okay, and unfortunately, I did have parents that had their own home. And also grandparents that had their own home and were able in the beginning to lend me some equity and be my guarantor. So that's how I started. In addition to that, I also had a couple of student loans in which I've borrowed from the government, in which I've actually not spent the entire amount. So in addition to my own savings and my student loan, that's how I actually began, purchasing one or two properties in the beginning. And once those one or two properties have been purchased, all you have to do is just wait for the market forces to go up, in which case you can then easily build up more equity and more equity.
Yeah, very good. I wonder, are you 22 properties, I said at the outset, and we read that in the article. How do you go about managing that number of properties?
Well, the thing is, on a day-to-day basis, each one of those properties, I've got a dedicated real estate agent managing it. And because I've actually got clusters of those property in one suburb and in one area, um, those agency, one single agency will actually manage, three or four or five of those properties, which makes my job a lot easier because rather than dealing with, 22 real estate agencies, I only have to deal with, two or three.
Okay, but you haven't got them all with the one, obviously, and I think that's obviously a definite move and quite a wise one too.
That's right because I've actually got properties in the Liverpool and the outer west area. In addition, I've got some in the Punchbowl Bankstown, the inner west area. So those will be managed by two sets of agencies.
What are some of the benefits you see of owning affordable rental properties, and what are some of the challenges?
Well, I guess the benefits of owning affordable properties is like I've said, it is very easy to keep the cash flow going. It is very easy for you to maintain them in case there's any work that needs to be done, simply because they're not that draining on your cash flow. And basically to maintain them, because I've got so many, it is actually quite easy to ring up the tradesman and say, hey, I've got multiple jobs for you. Can you sort of give me a discount? So that actually helps me a lot.
Interesting that do you do those maintenance calls yourself, or do you leave that up to the agencies?
Well, some for smaller issues like plumbing issues and small leaks and stuff like that, they don't really bother me because I've actually set a repair limit. Normally, within 150 bucks or 200 bucks. If it's less than that, then they don't bother me. Any sort of major repairs, then they'll just ring my phone up and get my permission to go ahead.
Mm. Let's look outside of Sydney now. Have you ever been tempted to move out and buy properties in other areas?
I have been tempted several times, along the areas of maybe Wollongong or Bathurst. The only issue is that moving out so far, it's not that I don't see the population growth to eventually be there. It is just a lot harder for me to visit the property, and especially in regards to repairs. If somebody actually sends me a bill, 5 grand, 10 grand, a major reno and stuff like that, it is very hard for me to just trust on an agency's word that it's been done well, and and me paying the bills. I would most definitely like to prefer to physically visit the property and see whether the job is indeed being done properly.
It's going to restrict you, isn't it? I mean, building your portfolio outside of Sydney. Not that there's anything wrong with that, but that is a limiting factor for you, isn't it?
Yes, that's right. In fact, once a lot of the properties which I love to, or in a lot of the areas which I love to invest are beginning to dry up these days because of the property boom, as you might know. So it is actually getting harder and harder to find decent, sort of positive or close to positive gearing properties within the Sydney market.
Have you ever looked overseas, Jason?
It was tempted a couple of years ago to go over to the US, right after the GFC. There's a lot of bargain houses there that may or may not be, an investor's cup of tea. However, going overseas does present its own challenges. You got the Aussie exchange rate that you have to worry about. You got taxation issues. So if you're not a very savvy investor, I would actually advise you not to buy a property overseas.
Very good advice. And on that note, we'll say, Jason, thank you so much for joining us. It's a great article in the Australian Property Investor April issue, and I wish you every success in the future, Jason. Thanks for your time.
All right. Thank you, Kevin.